But one stock that is in focus today is Mahindra Holidays. It came out with its Q1 FY25 numbers. And to discuss as to how the quarter has gone by and what FY25 looks like for the company, we're joined by Mr. Manoj Bhat, MD and CEO of Mahindra Holidays and Resorts India, who joins us now. Welcome to the show, Mr. Bhat. My first question to you is that give us some color as to how the quarter has gone by. Excellent set of numbers. Your net profit has gone up 5x. What has been the major levers that has led to this growth, and will you see this growth trajectory? I mean, will it be the same going forward in FY25?
First of all, thank you, Mahima, for having me on the show. So you're right. I think it was a good quarter for us. I think firstly on the macro theme, I think the travel hospitality industry is going through a boom, and we are obviously experiencing some of the benefits of that. So if I look at some of the key numbers, as you said, profits are up about 19% at the standalone level. At a consolidated level, it's almost up 6x. So very good from a profit perspective. But more importantly, if I look at measures like occupancy, we are running at 90% occupancy in India, which is very close to our all-time highs. And that's a reflection of the kind of demand we are seeing from our member base. Also, our member base grew to 3 lakh plus during the quarter. So we have 3 lakh members now, and we added about 3,700 members during the course of the quarter. So from a lot of perspectives, it's been a good quarter. And what is driving this is of course, the tremendous upsurge we are seeing in travel across the board. If I look at the way we look at it from a full year perspective, I think obviously 90%, this is the strongest quarter in the year, one of the strongest quarters in the year. But overall for the year, we trend around 85% occupancy. That's kind of the goal we'll target for. From a longer term perspective, I think it's really clearly, we have articulated that we want to double the number of rooms and also try and kind of maintain the same kind of occupancy. So from our perspective, that's inventory addition is some big area, and that's something we are well on track for. The last one I want to highlight is average unit realization. I think it was flashing on the screen also. Compared to last year, we are up 31%. So it kind of indicates the kind of products we are selling and the kind of quality of revenue we are getting. And that's something which I think we'll try and maintain as we go forward. With that, I think that I'll just sum it up saying it's been a strong quarter. And I think let's hope that this kind of trend continues as we go into the future.
About Anushri joining in here, you mentioned about a 31% growth that you've seen in your unit realizations, but I also wanted to get a better picture on the member additions that we've seen. So if we compare last year, FY24, we've seen about a quarterly run rate of about 5,000. But if again, coming to Q1 of FY25, we've seen about a 21% dip. What's your outlook on the same? Are we going to make up for this in the quarters going forward?
Thank you, Rishi. I think so. The way we should look at this is, you're right, the member addition did drop 21% when we compare to the same quarter last year. But I think I am looking at overall sales, which is AUR into members. So that's up about 4%. And so what we're trying to do is look at the kind of membership products we are selling, what is the product mix, what is the quality of revenue. And we are moving more towards products which are higher in terms of tenure. So that's some impact we are seeing. And I think that's something will continue to remain a focus. We don't guide for the full year, but clearly adding members is an important prerogative. But at the same time, I think we will continue to focus on AURs being up. And that's something will be a focus through the course of this year.
Right. And Mr. Bhat, you've already seen a 31% upside in your AUR, plus you're also saying that you plan to double your inventory going forward. So, I just want to understand that what is the kind of revenue guidance that, you're expecting overall in FY25? And, your margins have also significantly improved from, 13.6 to 16% almost now. So, do you think you'll be able to sustain these margins over, the entire course of the financial year 25?
So we don't guide as a it's a group policy, it's a company policy. So, but I think from my perspective, if I look at the quarter numbers, I think there are no extraordinary items. This is all in terms of a normal quarter, except for the seasonality. So from our perspective, I think the drive will be to see how we can maximize on returns. And from our perspective, that's something which, unfortunately, I don't have a number for you while we have internal numbers. But I think clearly the team is incentivized and motivated to kind of go for maximizing in terms of profitability as well as growth.
Well, that's fair, Mr. Bhat. So I'll shift the focus to the other side then. The cash position now that continues to remain on its stronger side. 1,400 crore of cash position that we are sitting at. I want to understand with the kind of capex that you've guided about more than 800 crore for this year and about 2,500 crore in the next 5 years. I want to understand what is going to be the outlook on debt. Currently, we are sitting on a net debt or net cash position. So what is the outlook on that, and where are we using maximum of this capex towards?
So, Anusha, if you look at the plans here, so we are planning to add about 5,000 rooms, out of which currently there are about 4 greenfield, brownfield projects which we are doing. So there is 2 in Himachal, there is 1 in Maharashtra, there's 1 we recently started in Jaipur. So that's one area where we are going to spend capex on. We also obviously, while we have capital light models where we would take long-term views and leases on certain properties, we also do investments on that. So I think those are the 2 main sources of capital usage. As regards the cash balance, I think it's kind of the testament to the model that this model does generate cash, which will be used up in the years going forward as we build out inventory. So that's something which will be the from your last question, from your perspective, as we look at debt, I think debt is some distance away because we are going to be cash positive and there are going to be internal accruals. So, for example, last year we generated in excess of 400 crores of cash flow. So from that perspective, I think debt is some distance away. It's a function of how quickly we expand. So for the next 1 or 2 years, at least, I see us as debt free, and then we'll talk about it more as we get closer to that time.
Right. Mr. Bhat, your FY25 revenue ended roughly around 2,700 odd crores, and you're sitting on a deferred revenue of 5,600 odd crores. So I just want to understand that in FY25, how much of this deferred revenue will be recognized in your books?
So on an average, my sense is, and I'm giving you a rough number just to give a feel. So if I look at every year, about my guess is about 400 crores, give or take, will flow through the books. But we add more than that. So I would anticipate the deferred revenue pool would keep continuing to go up. So from a balance sheet perspective, that number should keep going up.
If I were to look at your international business outlook, so there have been a couple of challenges here, but in the last quarter we did see a good set of numbers. But again, coming back to Q1, flattish sort of performance that we are looking at. When can we expect to reach that peak that we were looking in FY18 of about 165 million euros? What's your outlook on the current international business going forward?
So I think just a quick summary for all the viewers. I think obviously the HCR business has been impacted by 2 things. First is COVID happened, and then immediately after that the Ukraine-Russia war, which actually impacted in terms of the top line and the margins. So from an overall perspective, while the performance is stable now, and I think I want to say that last year was where we saw a sharp dip, and now we are stabilizing. And I'm hoping that we'll continue to focus on operating metrics and improve from here. I think from a longer term perspective, I think the focus here is to diversify the customer base away from the current dependence was on a lot of the Russian tourists coming there. So that's something which is a more longer term journey, but my broad view here is that the business has stabilized, and I think that's something which we'll probably try and go for improvements in this business as we go forward.
Right. Mr. Bhat, one last quick question. In the recent budget announcements, we've seen a lot of tourism push. Plus, we've also seen a lot of push towards pilgrim tourism. So I want to understand that, are you planning to expand in terms of the, for Bihar, Orissa and Andhra Pradesh specifically, because these are the areas that were focus areas in the budget. Are you planning to expand there? And if not there, what are the kind of geography expansions that you're planning this year?
So let me first pick the question on the states you mentioned. So Orissa, of course, we already have a tie-up with the government, and we are looking to expand there. Recently, I think we had also connected with the Andhra Pradesh government, because that's one area we are very keen on trying to build out more resorts. We currently have a very limited presence in Andhra Pradesh, and the government has been supportive. So from that perspective, both of these are focus states. To the broader question around religious tourism, I think we are exploring actively opportunities in that space, because a lot of focus and traffic will move through these areas. So destinations like Ayodhya, like Varanasi, and several others is something which is we are actively exploring to kind of build out a resort or take a presence there, and that's something we'll update as and when we move on that.
Okay, well, Mr. Bhat, thank you so much for giving us those insights on Mahindra Holidays and taking out time and speaking with us at NDTV Profit. Well, that was Mr. Manoj Bhat of Mahindra Holidays. With that, it's time to slip into a short break.